Welcome to another weekly S&P 500 analysis. Last week I did not post a video, but I did post a text version of the analysis in my newsletter to post to the market on Substack. So I refer you to go and take a look at that post to get some idea what were the price action they were looking at. And in addition to that, I also have posted a part one of the weekly S&P 500 market analysis. And that's where I cover the internals as well as the other major market indexes. And in this video, we're basically going to look at the possible price action for the coming week for the S&P 500 cash index, the E-mini S&P 500 future, the ES, and also the ETF for the S&P 500, the SPY, along with the NQ, which is the E-mini NASDAQ 100 future, and also the ETF for the NASDAQ 100, the QQQ. Now here we are looking at the S&P 500. Now last week the scenario we're looking at on the downside was basically coming down to this lower range, and we say that the key level to watch is to make sure that it holds above this 63.36 area, basically this low here. We want to make sure that the low will be above this low, so remain to be in a higher low, higher high structure in which this uptrend will continue. So we see that on Tuesday after the Labor Day holiday, it came in and gapped down and tagged the lower edge of the lower range, and also tagged this level here, 63.63. Then it snapped back up and closed about the 6,400. Then on the following day, actually reclaimed the 64.45. We're saying the pivotal point would be the 64.45. And you see that on Thursday, it actually did a little back test of it and then went back up and got close to the previous all-time high. Then on Friday, with a backdrop of the NFP, the non-farm payroll report, it actually gapped up and tagged the upper range of the weekly expected move before it got faded and sold off and came back down to the 64.45 once again. Now it did close above the 64.45. So we see that right now we saw a new all-time high on an intraday basis last Friday, but it did not close with a new all-time closing high. And here's what the market is pricing in for the coming week. It is pricing in a 65.62.50 and 65.55.80 for the upper range. And for the lower range, it's between 64.07.30 and 63.70. So once again, we're going to move this line up here to the new all-time high here. So what we're going to be watching for the coming week is, once again, the key level is the 64.45. This is the pivotal level. So we're going to be looking for the price to see would it be able to hold above this level. If it could hold above this level, then the all-time high will be in play, and also the upper range will be in play. Now, if you go and read the part one of my weekly market analysis, you will notice that there is a positive divergence between the AD line and the S&P 500. So that is indicating to us the possibility of a higher high for the S&P 500. So we could see another new all-time high for the S&P 500. Now, if it comes down to the 64.45 and unable to hold, once again, we're going to be watching the lower range, and now we're going to be keying off at this 63.63 level instead of the this level down here, 63.36, because if we break this low here, then we have a lower low. Now, although this might be a little bit more of a significant low, but again, we're basically looking for a break of structure. If it dipped below the 63.63, then we basically have put in a lower low, and that would put this uptrend in jeopardy. So we have to keep an eye on this 63.63. So the scenario is pretty much the same. It's just that we push it a little bit higher, and we lift that critical level, the lower low, a little bit higher as well. And here, looking at the ES, we see that the ES also came down in this high volume area here after the Labor Day holiday. It did dip below this high volume area and came down to near this 63.71, but it's still held about, hold above this low here. So we are still holding a higher low, and it did tag the lower range of the expected move. And similar to the S&P 500 cash index, it reclaimed the critical level here, this pivotal level at 46.6950, basically coming back inside of this high volume area. And on Friday, due to the non-farm payroll, it also pushes up to a new all-time high, but it did not get up to the upper range of the weekly expected move, unlike the S&P 500 cash index. But it did close back into this area here, this high volume no area, this high volume zone. So for the coming week, let me move this all-time high level up here. So for the coming week, here's what the market is pricing in. The market is pricing in the upper range between 65.67.5 and 65.62.5. For the lower range is between 64.15 and 63.75. So again, we're going to be looking for the price to see would it be able to move away from this balance area, this high volume area. If it could break above this 6,500 once again, then we're basically looking for a possibility of a new all-time high and into this upper range at the 65, 67 area. Now, if it is unable to hold this high volume zone, then we could see the price come down and try to fill this here to bridge this low volume area between this distribution and this distribution. Then after low chop, then we probably could see the price come down into the lower distribution and put the lower range in play. Now, once again, we're going to be watching this level here, 63.71. This would be the key level. If it breaks this low, then we're basically putting in a lower low, and that could be a break of the structure of that uptrend, the higher high, higher low. Then we have to be a little bit more cautious about the possibility of a little bit more, extended pullback. And for the SPY, we see that it also came down to the lower range and hit the edge, close to the edge of this lower distribution before it bounced back up into this upward distribution. Now on Friday, it did make a new all-time high on an intraday basis. And once again, that's just like the cash index, it did not close with a new all-time closing high. So we're going to be moving this here and tag this all-time high up here at 652.21. And also we're going to try to expand this balance area or this distribution upward a little bit more into this area here. And we're going to move this level up into this area near this high here. So it'd be basically looking at the possibility of this upper range here. And here are the level that the market is pricing in for the coming week. For the upper range is 654.70, 654.30, and the lower range is 639.80 and 634.50. So once again, we're basically looking for the possibility of breaking out of this upper distribution and move up to the all-time high and possibly put in a new all-time high and put this upper range in play. Now, if it is unable to remain inside of this upper distribution and it breaks below it, then one possibility is that we're going to see would it be able to chop around here and try to fill in some of these low volume area before it dip down to the lower distribution here and put the lower range in play. Now, the key level to watch here is this 634.72, this low here. Again, we're basically looking for a break of structure. We want to make sure that the low is above this low to ensure this higher low and higher high type of price action remain intact to keep the uptrend moving. And here looking at the NQ, you see that the NQ actually broke this low just by a few ticks here. So we basically have to keep an eye on it to see would it come back down and take out this low once again. And also will we see a lower high here. Because last week the NQ is unable to come up and take out the all-time high like the S&P 500 and also the ES. So right now we're basically looking at the NQ tagging the upper range of the weekly expected move and close back inside of this high volume area here. So for the coming week, we'll be watching to see will this low get taken out. And here's what the market is pricing in. For the upper range is just barely above the all-time high at 24,075 and 24,043. The lower range is 23,304 and 23,125. So the lower range is above this low here. So if it come down and tag the lower range, we probably still could hold above this low. Now, if the price continue to move back up into this high volume area and put in a new all-time high, then basically it will invalidate this potential breaker structure of a lower low, because then it probably will be looking at it like a double bottom type of bounce here. Then we probably could get a back test of this 23,830 sometime in the near future here. Once it get back up, above the all-time high, then we probably could see something like this. Maybe we see something, break the all-time high and then come back down and possibly test this area here, because then we're basically looking at this like a little bit of a double bottom formation here. So those are the possible scenario that we'll be watching on the upside, is to see would it be able to take out the all-time high to invalidate this low. Now, if we come back down and break below this 23,417, then we basically have to keep an eye on this lower distribution and these low here, these two low. And if we come down, and here's the next critical support, potential support, somewhere around this 22,780 area. And for the NQ actually came up and tagged the upper range of the weekly expected move and came into this high volume node here. But on Friday, it came back in to the middle of this distribution and basically just closed right at the near the upper portion of this distribution. Now it did come down and tag the lower range, but it did also hold, held above this low here. So unlike the future, it is still holding a higher low. So once again, we'll basically be keeping an eye on these low here and also the all-time high. And here's what the market is pricing in for the coming week. It's a very tight distribution here on the upper range, not much of a range because it's basically pricing in 585 on the top end. And on the bottom range, the lower range is between 567.10 and 561.50. So once again, we're basically looking for the possibility of moving back up and see would it be able to take out the all-time high and come up to the upper range. If it's unable to break out of this middle distribution, then we'll be looking for the possibility of to see would it be able to hold this 569 area, basically this lower edge of this distribution. And if it breaks below that, and then we look for the price to come back in to this lower distribution, and these low will be critical, for the price to hold above this low to remain or to maintain this higher low, higher high type of price action. Otherwise, then we'd be looking for a possibility of a little bit of a reversal in the near-term trend here. So those are the possible price scenario for the coming week. And be sure to go check out the post in my newsletter, the Pulse of the Market at substack.com. I have the link in the description below. Thank you for watching. If you like the content, be sure to give it a thumbs up. And if you are new to this channel, click the subscribe icon to subscribe and help support this channel. Now, for more content from me, go visit my newsletter at smtraderCA.substack.com. You will find trade ideas, daily trade plans, weekly market review and analysis, trading tutorial and strategies, and much more in my newsletter, The Pulse of the Market. And the link is smtraderCA.substack.com.